People are always surprised when I talk about gold. They expect me to love it, to recommend it, to say it's a great investment. But I don't. I never have. And I'm going to tell you why. Because I think very soon people are going to learn a harsh truth about gold, a truth that's going to cost them a lot of money. And I don't want that to happen to you. So I'm going to be honest, maybe brutally honest. Let me start with something I said years ago. Something that got me in trouble with the gold bugs. I called gold a pet rock. Just sits there. Doesn't do anything. Doesn't produce anything. And people got angry. Really angry. Jim doesn't understand gold. Jim's out of touch. But here's the thing. I wasn't trying to be mean. I was being accurate. Gold doesn't produce anything. It just sits there, looking pretty, sure, but not creating value. And that's the fundamental problem with gold. That's the harsh truth people need to understand. Let me explain what I mean. And let me do it by comparing gold to other investments. Suppose you have a choice. You can buy an ounce of gold for $2,000, or you can buy 2,000 worth of stock in a productive business. The gold, it just sits there. In 10 years, it's still just gold. It hasn't produced anything, hasn't created anything, hasn't earned anything. Now, maybe it's worth more, maybe it's worth less, but it hasn't done anything. The stock, the business. Over those 10 years, it's been working, producing goods, selling services, making profits, paying dividends. And those profits, they compound, they grow, they create more value. So in 10 years, you've got your gold, which is still just gold, and you've got your stock, which has generated a decade of earnings. Which would you rather have? Which is the better investment? To me, it's obvious the productive asset wins every time over the long run. Now, I know what gold investors say. They say, but Jim, gold is insurance. It's protection against inflation, against currency collapse. And I understand that argument. I really do. There's some logic to it, but here's what they're missing. Here's the harsh truth. Gold isn't actually a good inflation hedge. Not over the long term. The data doesn't support it. Let me give you some numbers. Real numbers. History. In 1980, gold hit $850 an ounce. Huge spike. Everyone thought it was going to the moon. And then it fell and fell and fell for 20 years. By 2000, gold was around $300 an ounce, down about 65% from the peak. Now, during those 20 years, was there inflation? Yes, plenty of it. Did gold protect you against inflation? No, it lost 2/3 of its value. Meanwhile, if you'd invested in stocks during that period in productive businesses, you'd have done extraordinarily well. The stock market went up maybe tenfold during that period, while gold fell by 2, by 3. That's not a hedge, that's a disaster. Now, gold bulls will say, but what about 2000 to 2011? Gold went way up then, and they're right. Gold to go up from 300 to version 900, more than sixfold. But you know what else happened during that period? We had the tech bubble burst, the financial crisis, real economic trouble. So, gold did well during a crisis period. Fine, that's what it's supposed to do. Right. But then from 2011 to 2015, gold fell again down to 1.050, lost almost half its value. And during that time, stocks recovered and went way up. Businesses kept producing, kept earning, kept creating value. So gold is volatile, really volatile. Sometimes it goes up, sometimes it goes down. And there's no reliable pattern. It's not a consistent hedge. It's just unpredictable. And that's the first harsh truth about gold. It doesn't reliably protect you against anything. It's just volatile. Second harsh truth, and this is a big one, gold is carrying costs. When you own gold, you have to store it, secure it, insure it, maybe pay for a vault, security systems. All of that costs money. Money that comes out of your pocket, money that reduces your return. Compare that to stocks. When you own stock in a good business, there's no carrying cost. In fact, the business might pay you dividends. So gold costs you money to own. Stocks might pay you money to own them. That's a huge difference. Over decades, that difference compounds dramatically. Third harsh truth about gold, you can't value it. There's no fundamental way to determine what it should be worth. With a business, you can look at earnings, cash flows, assets, book value. You can run a discounted CAD cash flow analysis. You can figure out roughly what the business is worth, what's a fair price. But with gold, there's no fundamental value. It's worth whatever someone else will pay for it. That's the greater fool theory. You're buying something hoping someone else will pay more later. That's not investing. That's speculation. And I don't like speculation. Never have, because speculation is gambling. And gambling you can lose. You can lose big. Fourth harsh truth, and this might upset people, but I have to say it. The gold market is full of, let's just say, questionable characters. People who are always predicting doom, currency collapse, hyperinflation, the end of the world, and their solution is always buy gold, buy more gold, buy all the gold you can. Now, some of these people genuinely believe this. They're sincere if misguided. But others, they're just trying to sell you gold. They profit when you buy. And that creates a conflict of interest, a big one. They're not giving you objective advice. They're selling you something, so you have to be skeptical, really skeptical. When someone's telling you gold is the answer to everything, because usually they're the one profiting from your purchase. Fifth harsh truth about gold, it doesn't generate income at all. A rental property generates rent. A bond generates interest. A stock generates dividends. A business generates profits. Gold, nothing. It just sits there. And that matters. It matters a lot because income is what builds wealth over time. When you receive dividends from a stock, you can reinvest them, buy more stock, and those new shares generate more dividends. That's compounding. That's how wealth grows. That's the snowball rolling down the hill. But gold doesn't compound. An ounce of gold today is an ounce of gold in 10 years. Same ounce, no compounding. So over time, over decades, gold falls further and further behind productive assets. That's just math. That's just reality. Now, let me tell you about something I think is going to happen, something I'm warning about. I think gold prices are going to disappoint people, especially people who bought recently at high prices. Here's why. Gold has been going up driven by fear. Fear of inflation, fear of debt, fear of government policies. And when prices are driven by fear, they tend to overshoot. They go higher than they should. But fear doesn't last forever. Eventually, people calm down. Reality sets in and prices correct. I think that's what's going to happen with gold. I think we're going to see a correction, maybe a big one. And when that happens, when gold falls 20%, 30%, 40%, people are going to learn this harsh truth. Gold isn't safe. It's not a sure thing. It's volatile. It's speculative. It can lose you money. And they're going to really wish they'd invested in something productive instead. Let me give you a specific example, something concrete to illustrate this. Let's say in 2011, when gold was at its peak of 900 an ounce, you had 100,000 to invest. You could buy about 53 ounces of gold, or you could invest in the S&P 500. Fast forward to today. What would each be worth? The gold at current prices around $2 an ounce would be worth about $106,000. You made 6% over 13 years. The S&P 500, it would be worth about $350,000, more than 3 times your money. So gold gave you 6% over 13 years. Stocks gave you 2/5%. That's the difference. That's the harsh truth. That's what gold investors don't want to hear. Now, someone will say, but you're cherry picking. You're starting at gold's peak. And yes, I am. But that's the point. That's exactly the point. People buy gold when they're scared, when prices are already high, when fear is driving the market, and then they get stuck. They hold it for years, maybe decades, and it doesn't perform. Meanwhile, they missed out on productive investments, on businesses creating value, on compounding returns. That's the opportunity cost, and it's huge. Let me tell you what I would do with 100 Zalozin, what I actually do with money. I would buy good businesses, companies with strong brands, competitive advantages, high returns on capital, companies I understand, companies that produce value, and I would hold them for decades. Let them compound. Let them grow. That's how you build wealth, not by buying a metal and hoping someone pays more for it later, but by owning productive assets, assets that work for you, that create value over time. That's the fundamental difference between investing and speculating. And gold is speculation. Now, I want to address something else, the argument that gold is real money. People say gold has been money for thousands of years. It's real. Fiat currency is fake. And look, I understand the historical argument. Gold has been used as money for a long time, but that doesn't make it a good investment. Those are two different things. Yes, gold was money before we had modern financial systems, before we had central banks, before we had stable currencies. But we do have those things now, and they work. Not perfectly, but they work. The U.S. dollar, despite all its problems, despite inflation, despite government debt, it's still the world's reserve currency. And you know why? Because it's backed by the most productive economy in the world, by American businesses, by American innovation. That's real value. That's what gives the dollar its worth. Not gold, not some metal in a vault, but productivity, real economic output. And that's what you should be investing in. Productivity. Businesses, real economic output. Not gold, not speculation, not fear. Let me tell you about something my colleagues and I used to discuss. The big money is not in the buying and selling, but in the waiting. And we were talking about patience, about holding good assets for a long time, about letting compounding work its magic. But here's the thing that only works with productive assets. If you're waiting with gold, you're not compounding anything. You're just waiting, hoping. But if you're waiting with stocks, with good businesses, they're compounding the whole time, growing, creating value. That's the difference. That's why I love businesses and don't love gold. Now, let me acknowledge something. Let me be fair. There are times, brief periods, when gold does well, when it makes sense to own some during severe crises, during hyperinflation, during currency collapses, during wars. In those extreme situations, gold can preserve purchasing power, can be a safe haven. But those situations are rare, really rare, and they're temporary. Most of the time, most of your investing lifetime, you're not in a crisis. You're in normal times. And in normal times, gold underperforms badly. So using gold as your main investment strategy, that's a mistake, a costly mistake. Maybe you keep 5% in gold as insurance, as a hedge against the truly catastrophic, but 20%, 50%, 100%, that's crazy. That's speculation. That's fear driving your decisions. And fear is a terrible investment advisor. Terrible. It makes you do stupid things, costly things. Let me tell you what I think is really going on with gold. The psychology behind it. People buy gold when they're scared, when they don't trust the system, when they think everything's going to collapse. And I understand that fear. I really do. The world can be scary, uncertain, unpredictable. But here's what I've learned. In decades of life, in decades of investing, betting against America, betting against human progress, betting against innovation and productivity, that's always been a losing bet. Always. Without exception. The people who got rich, the people who built wealth, they didn't do it by hoarding gold in a bunker. They did it by investing in businesses, in productive assets, in America, in progress. So when you buy gold, you're essentially betting against all of that. You're saying, I think things are going to get worse, not better. And that's a bad bet. Historically, it's always been a bad bet because things do get better. Not in a straight line, not without setbacks, but over time they get better. And when things get better, productive assets go up, businesses thrive, wealth compounds, gold just sits there, same as always. Now, let me talk about something specific, something current. A lot of people are buying gold right now because they're worried about government debt, about inflation, about currency debasement. And those are legitimate concerns, real concerns. I share some of them. But gold isn't the solution. It's not the answer to those problems. You want to protect against inflation. Own businesses with pricing power, businesses that can raise prices when costs go up. You want to protect against debt. Own businesses with low debt and high cash flows. Businesses that generate real earnings. Those are real solutions, real protections, not gold, not speculation. And here's something else people don't think about. When you buy gold, you're buying something that's already expensive. Gold prices have gone up a lot. They're near all-time highs. And when you buy something at all-time highs, you're paying peak prices. You're buying when everyone else is buying, when fear is highest. That's the worst time to buy anything, the absolute worst time. Better to buy when things are cheap, when nobody wants them, when fear is low. But with gold, people do the opposite. They buy when it's expensive, when fear is high, when prices have already gone up. And then they wonder why they don't make money, why gold disappoints them. It's because they're buying wrong. They're buying at the wrong time for the wrong reasons. That's the harsh truth about gold investors. Most of them are their own worst enemy. Let me give you another concrete example about opportunity cost. If you'd invested $10,000 in gold in 1980 and held it until today, you'd have about $23,000, a little more than doubled your money. Not terrible, but not great either. That's about 2% annual return over 44 years. Now, if you'd invested that same $10,000 in the S&P 500 in 1980, you'd have about $2 million today. Let me repeat that. Gold, $23,000, stocks, $2 million. That's the opportunity cost. That's what you give up when you invest in gold instead of productive assets. That's not a small difference. That's a life-changing difference. That's the difference between a comfortable retirement and struggling financially. And that's the harsh truth. That's what people need to understand. Gold feels safe. It feels solid. It feels like you're protecting yourself, but you're not. You're actually hurting yourself dramatically over the long term because you're choosing a non-productive asset over productive ones. You're choosing stagnation over growth, fear over opportunity. And that's a costly choice, a very costly choice. Now, I want to be clear about something. I'm not saying gold is worthless. It has industrial uses, jewelry uses, some practical value, but as an investment, as a way to build wealth, as your main strategy, it's terrible. Probably terrible. The data is clear. And yet people keep buying it, keep betting on it, keep hoping it's the answer. And I'm telling you, I'm warning you, you're going to be disappointed. Very soon, I think within the next few years, gold is going to have a reckoning. Prices will correct. Fear will subside, reality will set in, and people who paid $2,000 or $500 an ounce, they're going to watch their so-called safe investment fall 30%, 40%, maybe more, and they're going to learn this harsh truth. Gold isn't safe. Gold isn't reliable. Gold is just another volatile asset, and they're going to really wish they'd listened, that they'd invested in businesses instead, in productivity instead, in growth instead, because those things actually work. Those things actually build wealth. Those things actually compound over time. Gold doesn't. Gold never has. Gold never will. That's the harsh truth about gold, and that's what people are going to learn very soon.